Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys we'll take a look at the euro currency again. In the last couple of weeks we start to see there's some bullish setups and scenarios on major currencies here and there. So yesterday we have discussed the situation on Australian dollar. Very interesting step on the weekly chart and still stands in progress. Yes, the market has shown nice upward action based on the poor ISM services index. So it has impact on all major currencies, including the gold market. Also, right now we see interesting long-term development on the New Zealand dollar because it's probably the story for a monthly report. But in the two words on the monthly chart of the New Zealand dollar, we see the opposite breakout of the flag consolidation that usually very bullish. And the market indeed could continue to move higher. On the euro currency, guys, also we still do not see any issues that could put the shadow on our bullish performance, on the bullish setup on the euro currency. As we said, 1130 will be the major level that should determine the destiny on the euro currency in the short-term perspective. So we said that if market will drop through the 1130, this will mean that market will stand in the new medium-term bear trend and will drop first to the 109 and later it could follow to the 105 lows. But if market will stand above 1130, in this case it keeps valid both bullish patterns that we have here. The first one is the Gartley's 222 buy. As you can see, it's large pattern. So as you can see, this one. And the part of this pattern is the reverse head and shoulders pattern. As you can see, market right now stands at the final stage of this pattern, is forming the bottom of the right shoulder here. The target as this larger pattern, as the head and shoulders pattern, stands the same. So its minimum target stands right around this top. It's 116 area. Currently, guys, definitely the poor numbers from the United States economy put the shell on the perspective of probably some comments from the Fed is coming on the September and so on, and that makes impact on the dollar strength. But honestly speaking, currently it's not really clear how significant this impact will be and whether it will be sufficient for some changes in the rhetoric of the Fed representatives. So how really significant impact could be on the rate decision? Right now it's absolutely unclear. That's why it's very difficult to count by far on some really significant long-term bull trend on the euro currency or something of that sort. That's why we probably need to be focused first on some really tight and close targets and work through this overall setup step by step. So currently we see absolutely normal behavior from the bullish point of view. This market behaves that it should. Yes, here we see some extreme volatility, but this is understandable because right in that moment we've got important data. That's why there's a bit not a smooth action around the bottom of the right shoulder as we would like to see, for example, as here. But still, overall action looks absolutely normal. So market was able to hold above the major level. Upward action is really strong, how it should be on the forming right shoulder, because here the market mechanics of this pattern stands so that here the first part of the pattern stands under control of the bears, while second part, when the control should shift to the bulls. And this upward action was really fast, and the bounce out from the bottom of the right shoulder is also fast, although it was supported by the ISM data. That's why absolutely not would not see any problems with the current situation, and absolutely normal bullish setup is forming here. By taking a closer look at this behavior that we see here on the 4-hour time frame chart, we have some ABCD action to the upside, and you could argue, for example, that, well, you could say that maybe we will have the regardless triple to sell. So this is a drop, ABCD retracement, and market should continue move lower. Well, actually, we can't exclude this totally, but overall market behavior here mostly suggests some further upward continuation. Why? Because take a look at this CD leg of the ABCD pattern. It's almost vertical, and this is not typical for the retracement. When the market is really shows the retracement on the bear trend, any upward action should look heavy, and market should exhaust on the final stage of the retracement. So it should show its weakness on the upward action. That's why it calls retracement. But when the market shows such sort of the action and the final stage of the ABCD retracement, so just single candle upward action, so this thrusting acceleration to the upside, this doesn't look like a retracement. And currently market stands above as the monthly pivot point as the here and weekly pivot point, and also market stands above the monthly pivot resistance one. This is also not good sign for the bears. That's why, guys, our suggestion is that market should continue move at least to the next target that will stand around monthly pivot resistance one, and it will be 1618 extension, 11340 area. It's right here. Of this ABC bottom 100% extension has been completed. Market stands in tight consolidation. Next target will be 1618, 11340. It's interesting that this target coincides with the neckline of this pattern, approximately 11340 as well. So that being said, next step that we expect to see is the reaching of the neckline on the daily chart. For the bears, I could say only one thing, that the major break-even point will be right here at that bottom. So if market will fail somehow either to pass through the neckline or just will reverse earlier and break at this area to the downside, in this case we could say yes, the bullish setup has failed, because by this action market will raise both of these patterns, as this one, as the card is 222. The drop below this level will be unnatural from the bullish perspective. That's why we could say that only breakout from this level will totally destroy the short-term bullish setup. Here, guys, if you still think that market will form godless 222 sell or something that's something of that sort, and if you still would like to take the short position, well, it's not forbidden. So you could try to do this here, because you can see market stands at agreement resistance. And if you will become wrong, this will provide you at least some protection, since market stands at the strong resistance area, and some minor bounce probably will happen here. At this bounce, you will have to move your stop to the break-even just to protect your position, if you still would like to go against this overall action. That's just I just try to help you and to give you an idea how to do this safely, because here the chances of the loss from the short position is really very significant, because this action is very strong. But if you still would like to take the short position, try to do this at the strong resistance. For example, as here, it's major resistance 619 fib level, and take a look completion of the ABCD pattern. It means that we have here agreement resistance, and taking the short out from the resistance out from the agreement resistance much safer. As I said, minor bounce could help you to move your stop to the break-even and at least finish this trade with no loss if you will become wrong and market will turn to the upside again. That's the major idea. So on the hourly chart, guys, we see that markets now is trying to make the retracement. We think that retracement should not be too significant, and most probable that it will stop either here, it's 1226, or at the confluence support at 12 even. 12 even is more probable because this is the confluence. Also, guys, this is the natural support resistance line. As you can see, this is former resistance. Market drop down, now break it up. This will be a natural support area. And also, guys, I don't have this level on this chart, but this is also the 50% support of the most recent leg. From this low to this top, this will be also the 50%. And take a look, this is the middle of this thrusting candle. So that will be most probable support area. The market should stop retracement if it indeed bullish. That's what we will be watching for. So if you would like to take the long position here on upward continuation, you also could watch for this level and see whether the market will form some upside reversal pattern on the lower time frame charts. On the maybe 15-minute chart, market could form here something, some butterfly or something of that sort. So keep an eye on this 12-even area. So it seems that this market really likes mostly 50% supports. This level could be really useful for us, at least from the perspective of the possible taking the long position. So that's been said, currently we think that's not time for taking the short position yet, and market really has the chance to continue move high at least to the 113.40 area and reach the neckline on the daily chart. After that we will see what will happen.